Welcome to Benson Financial Group monthly video. Today I plan to take you through a little brief history of the market and how we've gotten to where we are today. Did you know that $1 invested in the US stock market in 1802 would be worth millions today? If you took that same dollar and invested it in bonds, it would only be worth thousands. That same dollar in gold would be worth around $4. The history of the stock market really dates back to the 1600s with the Dutch East Trading Company, which formed the first individual publicly traded stock. And so what an individual stock is it's a company that is divided into many parts called stocks, where those ownership parts are sold to individuals or other companies. And then after that, the Amsterdam Trading Stock Exchange started. That idea caught fire in the 1700s in London with coffee and tea. Fast forward to 1792 and the Buttonwood Agreement was passed, and the start of the American Stock Exchange was born out of there. And since then, the stock market in the United States has grown through the 1800s with the Industrial Revolution, the expansion of railroads, and utilizing public capital raised through the stock market to help expand the United States. And then as we got into the 1900s, we saw the market continue to rise, especially in the early 1920s. We saw the market really grow a lot. And then in 1929, we saw the beginning of the Great Depression, and it led to many years of decline in economics and the decline in the stock market, and took over a decade to recover. 1987, we saw a big drop in the market that is known as Black Monday, where the market dropped a considerable amount in one day. Then the 1990s, we saw the market expand into the dot-com crash, which is in 2000 to 2002, where we saw tech companies drop considerably. Then we saw a recovery of that led into the 2007 through 2009 Great Recession, where the market dropped around 50% overall. Then the market continued to rebound and continued to grow through the 2010s and into the 2020s, where we saw COVID and some inflationary troubles, where we've seen the market have its ups and downs, but overall have very strong returns. Jeremy Siegel tells us that looking at the data from 1802, that dollar invested would have returned 6.5% to 7% above inflation in the US stock market. So that is why we at Benson Financial Group believe stocks is one of the best retainer of values and helps outpace inflation. It's not without its ups and its downs, but it's one of the best vehicles for growing and maintaining wealth. Thank you for your time. We appreciate you taking the time to watch this video.